It is sub 10,800 now on the Nifty. This last bit of the fall has been swift. And Anuj, it reminds me of yesterday. Throughout the day, you try to hold some certain levels, you play that range. And towards the end, people are like, you know what, let's not do this anymore. So your thoughts on what's happened now?
No, I think today's, sort of been, classical textbook stuff. And people should not complain about today because today the market's given you great money-making opportunity on the short side. It gave you a gap up, which should have been sold into, like it did. And then it gave you that 12 to 130 move, which
slight bounce,
which gets sold into. So that way, I think it's for me, it's not surprising. The bank Nifty has been decisively weak, and you made some kind of hard top. The news-driven top has been made now, just like you made the news-driven bottom, and after that, the market did rally quite a bit. There's nothing wrong in the market now finding its logical level at lower levels. It will bounce back, of course, perhaps at some point around those levels. Also, this India underperformance is getting more and more stark now.
Yeah.
Like, if you now see global markets, for example, today, this is not pressure from the global market. You could argue about crude. Perhaps crude's rally, of course, having a bit of an impact. The global screen is not showing you any jitters. This is India. This is India specific. And the sooner we make peace with that, the better it is. I think this market is still correcting the excesses of 2017. I have no doubt about it. You look at a stock like a graphite or an HEG. You look at all the huge, the big metal rally. There's so many stocks which became 10 bagger, 20 bagger, 50 bagger, 60 bagger. Right now what we're looking at is stocks falling from their highs. We forget. For an example, in HEG, it's fallen 50% from its peak. That's meaningless. Before that, the kind of rally that it had, there were a lot of excesses in the system. I think they are getting corrected now, and that's how markets work. By the way, there's a bull market, there's a bear market.
Absolutely, it's been a painful churn down for those who are holding these stocks and got in at the peak. It's just been nothing short of painful. But anyhow, let's see, 40 down on the Nifty. It's still sliding, and we still have more than 15 minutes of trade left. On that note, let's welcome in our Alpha Manager of the Day, Anand Shah, Deputy CEO, Head of Investments at BNP Paribas Mutual Fund, joins in. Anand, interesting time for fund managers like yourself, right? While this is a great time to start picking stocks because, prices have come down, I'm sure there are also questions. There are also nerves with the investors feeling the heat, including, I think, some of the mid-cap funds, right?
Indeed, I think we had a tremendous 2017, as Anuj was also just telling you, in terms of mid-caps and small caps. And to some extent, there has been a sort of a reality hit as far as mid-caps and small caps concerned through the 2018, and it's continuing to some extent even in 2019. So, yes, it's an interesting times. I think the quality has paid off very well in 2018 and continues to do well. The bottom-up stock picking is to some extent working, and a lot of those froth is actually getting out of the system, which is in a way a very good news if you were to build your portfolio from the scratch at this point of time.
Okay, by the way, if you're thinking Eicher has created some kind of bottom, just look at the stock right now for Eicher Motors. I think down 5% now. That entire rally is gone. And how? Back to 20,000 on that stock. Anand, hi, good afternoon. This is one space which didn't have a big rally to begin with last year, autos, but the correction seems to be continuing. Two-wheelers perhaps in the value zone right now. Do you want to buy them? What about four-wheelers? Anything that looks interesting to you right now?
I think auto is entering that slow growth mode in the sense that the penetration game which played out into the auto sector initially in two-wheelers and then in four-wheelers and also to some extent in high-end bikes. But frankly, if you see historically a large sort of wealth has got created in auto sector whenever a new category has come up. And unfortunately within the two-wheelers, the new category which came up, which was scooter, has been actually participated by more by a unlisted player, which is Honda in this case. And to that extent, for the listed auto market space, there's nothing much really new product or a new line of product which has really given you growth which is higher than the GDP growth rate, and that's what's been sort of ailing the auto sector. Add to that a recent slowdown post the NBFC crisis is also taking toll on quite a few categories, especially at the higher end of the auto sector. So overall it was in the slow mode, and that's got further slowed down because of the NBFC crisis. I think it will take a while. Obviously, crude price is great news because in August, in September, we also were looking at a good hike in the petrol and diesel price working against the auto stock. But that is sort of not the pain point at this point of time. So I think a few more months of a consolidation in this sector, but notwithstanding that, I think it's in the slow growth mode. And today the more exciting space within the consumption is not auto but somewhere else.
What is that somewhere else? Because again in consumption as well, Anand, what the last 3-4 months have taught us that there's no room for error. You come out with one bad quarter of earnings, the market will punish you. So what would you buy in consumer?
Indeed, you are right that valuations don't leave much margin for error, especially in a B2C consumption space. But frankly, if you see the wallet, where the middle income or middle income India is actually incrementally spending, definitely airline was one sector which you are seeing growth which is far faster than the GDP growth rate. We also are seeing low cost housing, which is another space where the growth is much higher. Private sector banking, insurance, mutual funds, these are the other space which has been growing much faster. And last but not the least, the entertainment sector. I think these are the few segments of the market where we incrementally spending more, and which is also there in the listed space. Outside the listed space, obviously where the middle income families are spending more is obviously on education and foreign tourism. So that's also space where we are incrementally spending more.
Okay, by the way, if you're wondering whether the weekly options on Nifty would be as successful as the Bank Nifty, this is the third day of the weekly options on Nifty, and the top two traded products are the 10,900 call for tomorrow's expiry and the 10,800 put for tomorrow's expiry. So that product is going to be a huge success, absolutely no doubt about it. It will suck out some volume from the full month expiry. Now, you could argue whether, this is making our market more of a, near-term casino kind of market. You could argue about it because, this is just weekly product. What next then now? Weekly futures and options now on stocks as well. Is that something that you want to do? There's weekly options also on currency market, which has made the currency market also quite volatile. So the volatility is going to be the order of the day, but it's helping the exchanges without a doubt because the volumes are just hitting through the roof right now. 8 lakh crores is what you have done in the F&O market. So obviously,
so tomorrow becomes the first expiry of the Nifty weekly contract.
Tomorrow becomes the sort of a triple witching day for because you'll have the Nifty and the Bank Nifty both weekly expiries happening. Yes. And now the concept of monthly is irrelevant
because you can play week by week.
Because you are
it's
playing
a volatile world
slowly.
Anyway.
The meaning of the monthly, will
monthly F&O expiry.
Monthly F&O expiry, because the last week of the month, anyway, there's no weekly. That is the monthly expiry as well. How this will help is, for example, ahead of policy or ahead of big results. If we want to hedge ahead of Infosys numbers, we want to do that. That is where I think this product will be useful. But for now, I think near term, of course, the volatility is going to go up. And Anand, that was my next question. The market's seen a lot of volatility, and there's a good chance our market has already underperformed a lot this year compared to the other markets. How should one sort of make the portfolio, adjust the portfolios to protect the capital up until, say, May, June? There's a good chance that the market remains volatile up until elections.
I think what we've been doing in our portfolios is actually we've been more focusing on cash flows. I think very clearly we have stayed away from highly leveraged companies in such an environment. We focused on high ROE, high entry barrier business, which again makes them a little more resilient to the volatility which we are talking about. So overall, we are looking at a couple of things. One, obviously the upcoming general elections, but also the crude price volatility which we have seen in the second half of 2018. That also led to a significant volatility in the markets. We don't know yet where the crude is going to stabilize. We have just seen a beginning of the crude price, crude production cuts in Saudi. So in that scenario, what we have done, and very successfully we've been able to protect the wealth on the corrections and produce some alpha in last 3 to 4 months has been by focusing on right quality businesses. As I said even before, that a good quality business have been rewarded in the market, especially in the market when there's so much of volatility and uncertainty ahead. I think we are just sticking to it. We are just buying more B2C businesses, more high quality, high return on equity businesses and free cash flow. I think that has been sort of a central to our investment thesis at this point of time.
Finally, Anand, you are also launching, of course, a dynamic equity fund. So I guess that's the time, right? Because it lets you move between asset classes depending on market valuations. Now, for this product or generally any of the funds, how would you look at corporate banks? Because they were becoming a big pillar for the market. The kind of move we saw in ICICI Bank, SBI, the hope that the worst is over. But now even this pocket is getting a little jittery.
I think you're right to the extent that the first round of discovery of the corporate banks has happened, but please understand, we had one of the biggest sort of cleanup in the banking system, particularly on the corporate bank side. We had slippages to the extent of 20-30% of the overall corporate book, depending on which bank we are talking about. So to that extent, I think this is a good sort of a correction that has happened system-wide and especially specific banks. We believe corporate banking space from here on would have whatever little bit growth we allow, but actually the profit growth will far outstrip the overall balance sheet growth rate. And to that extent, yes, the first round you might say has happened, but I think further rounds of profit growth rate, book value growth rate, ROE comeback for those banks and the re-rating is still something which we'll continue to look for and we'll continue to update ourselves, keep aware of what's happening on the quarterly basis. But I think we're still in the right direction on the corporate bank side.
Okay, Anand, we'll wrap it up on that note then for today. Thank you very much for joining us and giving us some sense on how you're reading the market, a market which is increasingly fragile and weak. Days low, no sign of buyers, 50 points gone. This has been a painful last half an hour.